All right. 1, 2, 3 test, and we are in. Welcome everyone. Welcome to this Saturday. Oh, actually it's Sunday. A new session of the FS3 Tokyo Open Live Room. Very, very important session, as you know, on Sundays, because on Sundays we review. We actually review the opportunity for the week. So thanks for joining in. Thanks, Rory, Jax, FX Ambassador, Scott, Beckton, Mervin, FX Street, Desi, Pantelis, Roland, Kerry. Hi, Pantelis. Thanks for your email. Hello everyone. Beckton, Pantelis, Mervin, Rory, FX Ambassador. Thanks for joining in. Scott, thanks for joining in there. All right, so welcome to the Sunday session of the FS3 Tokyo Open Live Room. This is a daily show that features real trading at the very heart of the Asian session with me. I'm Giuseppe Basile, also known as the FibStalker. Hello everyone. Hello Kerry. I see Roland and Kerry coming in. Welcome guys. Thanks for joining in. As you know, I stalk price using a selection of Fibonacci. I don't stalk people, so don't point your fingers to me when I say I'm a Fib stalker. I only stalk price. All right, so let me say hello to everybody here. Hello everyone, I hope everything is good. I hope you had a great weekend and you're ready to start again. Some of you are already there on the start line, and things have already started up and heated up in Wellington, and then Australia, New Zealand and Australia, and now Tokyo. So let's get into this. We have a lot of things to review here. But first of all, you know, I take risk very, very seriously. I implement one of the free risk trade approach. It's not the most aggressive one, but it's certainly a very important one. Trading Forex and its derivatives, futures, options, CFDs, and any other instruments, and other instruments where retail off-exchange transactions involve substantial risk of loss, and it's not suitable to all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you, and it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review FS3 risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information I'm providing here in this material is for general information and for educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FS3 will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, guys, so this is the common disclaimer, and as you know, I'm one of the webinars contributors and FS3 contributors. And there are a lot of open and premium webinar you can review my page. So let's get into the charts and let's look at what's going on here. And let me clean things up a little bit on my busy screens here. And let me see where my charts are. They're buried somewhere below. Here we go. All right, so what you see on the screen are the charts for of the main markets I follow. So let's see who's there. People, welcome people. We have Gary as well. Greetings all. Roland, Pantelis, Mervin, Lee. Thanks for joining, Lee. We have Rory. Rory, you are in with from 2 computers with 2 accounts. That's okay. More is good, less is more sometimes. We are fine and we are ready to start. So it has been a very, very volatile week, especially the last well, especially on Friday. On Friday we saw a lot of movements in basically all the markets we are following here. Hello, Joe. Welcome. So we have also Joe. Good day. And so as you remember, we let's start from the euro dollar here. As you remember, we had a participation of 109.60. When I see things like that, like this, I never get worried. And you know now, you start knowing now my style. For those of you who do not know my style, when I get involved in this 50% level after a test, I usually get involved and receive a free trade, and we have free trade here. So when we are stopped down like this, we are not stopped with a loss. Our only loss is the cost of trading, which is slippage plus the transaction cost if you have them, and I actually include the cost, the spread into my risk. So I won't count the spread in my cost of trading because it's already included when I get a free trade. What I mean is the stop includes the spread as well. So whenever I get a free trade, I know that half of my position is out, and actually my free trade comes at 1 unit of gain in risk. This is a very good compromise for good gain and protection of capital. And remember that capital protection is the very first job of a trader. It's not that of generating gains, but is of protecting as much as is of protecting the capital. So in this moment, we still have this price of the euro within this area of potential participation of daily longs. Euro going to 107. That's what FX ambassador is projecting there. This is very possible, but if he goes to 107, I see no reason for it to go even lower. Indeed, I believe euro, if he breaks that 108.60 here, is going to revisit lows, not only stopping at 107. Okay, so in the meantime, I would use as all right, people, you have no volume there. Let me do a quick check here. Let me see. It looks like some of you do not have volume. Okay, now it's okay. So the benchmark that I would use for the euro wouldn't be the euro. If the euro breaks this level, we don't know exactly what level is going to stop. I believe it's very possible to. So okay, I see the sound is okay there. It's very possible for this price to revisit 105.40, but the tell will come from the US dollar Japanese yen here. Okay, so this market has the potential to retrace all the way into 116.30, and there's another level which is 118.40 that have been showing in the past as well. These are the two levels if the market continues higher here, and that's what we possibly wanna see here. The what we have here is that we have an uncommitted longs weekly. Weeklies are not interested in longs here. So what you're seeing here, it's all the effect on the US dollar Japanese yen. US dollar Japanese yen into the next area of resistance, so the next area of short. I strongly believe that US dollar Japanese yen is going to see 170, which is this level here, and I want to invite you to actually let me see if I can find that. So what I wanna show you here is from FX Street. I want to show you the projection that I gave in this market around August the 1st, 2014, and it's all recorded there. And let me just Let me just found that on just give me one second here. Just trying to find that report that was 2000. I think it was published August the 1st, 2014. Now, let me see. And it was a complete report, a 6 months report that we had there. Just give me 1 second here, Japanese economy. And the reason why I want to show that is because there was a clear projection of price, and eventually price went into those targets. And that report shows very, very well how sometimes the let me see if I can find that. I cannot find that very easily, so so I'll let it go for now. But this market has been very, very technical, and still is very, very technical here. And our last, we had a weekly participation here, first and second target hit, and then the next weekly level was initially was broken here. So that means to me that the weeklies are not committed in this market. And on the other hand, we had the daily long also abandoning this market, and eventually the daily short took advantage of it. And so at the moment we have a market that has the possibility to retrace all the way. Believe it or not, it has the possibility to retrace all the way into that 118.40. That's one of the levels that I'm going to show. I've showed there. So there are two levels that are going to tell, I believe, also the story for the euro as well. And I treat US dollar and Japanese yen. I couple them together because very often what we see one of the market. When one of the market moves laterally, moves lower, the other market typically moves higher or laterally. That's what we have seen here in the US dollar Japanese yen as the US dollar has corrected. And so the US dollar Japanese yen is going to be, for me, the market that will tell the full story here of what's going to happen in the near future in this market. I see the FX ambassador has changed now. Euro could go to 105, very good. It was 107 before. And Kiwi looks like it wants to go lower. Kiwi has been broken down badly here. We're going to review that. But before we get there, I just want to complete on the US dollar Japanese yen here. What I see in this market is a market that has to continue lower. And that, again, is going to be 100 level, 170, 101 is going to be the level I'm gonna look at. Some people will see overhead supply here in this area. The reality is that this is an area that, for other reasons, potential area of participation long from algorithms, and we don't know whether this market, where this market is going to start moving lower. If you look at the move today, you would think this market is starting to move lower. The reality is that we need participation from a larger group of traders and algorithms, and I see them on the daily at those two levels that I mentioned, 118.40 and 116.30. So these are the two levels in this market. So this market is going to say a lot about also the behavior of the US dollar index, as well as how the US dollar is going to influence all the other markets. All right. So as the Kiwi has been mentioned there, thanks FX Ambassador for bringing that up. Let's review what happened here. We were well in our way into that second target there, and then there was this market breaking badly here, which means the US dollar Japanese yen getting traction on Friday, and this market has retraced basically more than 100 pips here, 67, 70, 150 pips here. All right. Now, I've already discussed this. I mean, you could take profit at previous highs here, right? The question is, if you take profits on these trades, you never realize the potential for the large trades. Someone has calculated a 19 reward to risk in this market. See, the point is that 80% of your gains will come from 20% of your trades, which are the trades that you bring to target. If we keep taking profits, smaller profits in these trades, we will never ever realize the big potential that there is in the market. And unfortunately, a lot of people are not capable of following or leaving their trade work for multiple days or for several weeks. In this case, this market has been, this trade has been working well for more than 1 week here. Jax is a demonstration of this, of what I just said. I mean, a bird in the hand is worth two in a bush. But Jax, I mean, all the professionals who have tens and tens of years in trading, and there is one of my mentors, he has 10 years. There are people like, I can mention a few of them. Dave Landry has more than 20 years. He said the same things. Jake Bernstein, he has more than 40 years of experience. He says the same thing. So I have to respectfully disagree with this on this with you. I don't believe a bird in the hand is worth two in a bush when you want to realize the max potential in trading. 80% of my gains come from 20% of my trades. And and if you keep taking, when you have a good setup like this, which is a daily setup with a target 300 pips above, that's where you realize the tenths of unit of risk in a reward. So the most important thing is to manage this trade. This market could stop here and now continue higher. You will never know. So again, I mean, I have to warn on the, and that's something that you can take as you want, of course. But I have to warn on this, that if we keep taking the 1, the 2 unit of risk, the 3, the 4 unit of risk, and we never realize our 20 reward to risk, we will never be ahead in this game. And I'm dropping it there. Everyone's experience is different. That's my experience. And again, I don't want to hide myself behind bigger names, but that's what I've been recording from from other people in the industry as well. And I had a confirmation recently as well from the New York Traders Expo. I had a chat Dave Landry. I went to watch also Jake Bernstein. And by the way, I mean, the videos are still online and are free. If you go to by the way, if you go to New York, let me check that. New York Traders Expo. New York Traders Expo. Very good to register there and look at the presentation. They're all free, so it's very good material. And now actually if you go to Trader, and I wanna leave you with this link as well, because I think it's very important. If you if you go to New York Trading Expo, now you are redirected into this Trading Expo virtual event here.com, and that's what you see. That's what you see on the screen when you actually when you actually when you actually go there. When you use the link there, that's what you see now, and you can register and enter. You can register for free and enter, and watch all what other traders are saying about this, and you will see that traders that have much more experience than me all agree on the fact that there is an 80-20 rule. So 80% of your gains will come from 20% of your trades. So let me go back here and let me show the charts so we can continue on the charts. And so I have here, I have put my stop loss to entry to 865.5. If they retest, I can have a break even. That's a sensitive thing to do, Mervin. I mean, it's a good way to manage the trade. When you use the free risk approach, you can actually keep your stop at the lows. In this case, we use a stop at the lows, and you can still have a break even if the market stops you out. And that's the whole purpose of using a free risk trade, to let the market move. So I'm not sure what this market is gonna do. For sure, the second test here of 65.50 is going to be a dangerous test. However, the market could retest successfully this level and continue higher. So I would do again and again and again. I would do the same thing I've been doing here, waiting for this market to get into 168.45. If the market breaks this area, it's going to give us information that we use for price discovery. So it's all good what the market is going to give us. The most important thing is that we respect the market, and we actually get information and understand from the way the market behaves what's changing in the market. For example, when we look at US dollar Canadian dollar here, we see that the 135.44 here is broken on the downside, and that gives us an information that weekly are not interested in pushing this price higher. So that's very, very important. So see, whenever we get the market behaving in a certain way, we are constantly gathering information on it, and it doesn't bother to me if the market behaves like this. In fact, I'm not emotionally attached to this position here. This is a position like all the others, and whenever I take a position here, I always consider all the potential outcomes, right? Of course, this gap down here doesn't look good, but it also suggests that this gap could be filled, right? And then we could see a continuation lower, or we don't know. So Reg is saying, hello Reg, thanks for joining, by the way. Greg is saying people have been projecting 0.62 on the New Zealand dollar for months. 67, 68 is too high. Well, see, Reg, I mean, my trading is not driven by what people are projecting. Actually, my trading is completely detached from that. Good morning. And my trading is completely detached from it. I don't even know what has been projected, because very often what is projected is wrong, actually. And by the way, what is projected can change, and the projection can change as well. So I prefer to look at participation, area of participation, and project my targets. What is too high or too low? I mean, it's very, very relative to me. So, like in my trading, I don't take into consideration what other people think. And I don't do that out of pride or out of an idea of being right. That's not the motivator for me. The motivator for me is that I want to put myself in a situation where I'm not influenced by ideas, and I only trade mechanically my method. This has served me and my students and clients and people who have adopted the course and the methods very well. And I'm not here to to boast or to sell because I have nothing to sell. But the idea is that if we always put our idea in and trading in the if we always put our ideas in the hand of the opinion or the convergence of the opinions of other people, we will always be in a situation where we are totally uncertain of what we have to do. Because how do you reconcile? And this is a very good point. Thanks for bringing it in. Yeah, yeah, and thanks for bringing that in, because that offers an opportunity for discussion. And you say, yes, I understand my time frame is month in a trade, which also means that you have very large stops as well, because if your time frame is a month, either you have very large stops, and then you can trade opinions. Yeah, so I mean, as you're saying there, there are several opinions from different people and different institutions as well. So it's good to share that. I just want to warn that it's good to follow whatever method you follow. It's too good to follow a method that justifies the target. That does just not get those targets from other sources which could have different agendas or different needs or different reason for projecting one level or the other. Goldman is not always right, and Reg there is saying, of course, Goldman has an 80 cents on the euro. That could even happen, temporarily can happen, but you believe, but for that to happen, it means that the US dollar will need to strengthen. And I believe that's really something that can only happen in the short term, as I believe everyone knows that the dollar is in a very big, very in big troubles, actually, because last year the Chinese government for the first time became a net seller of bonds. So if you don't reconcile that and actually put that in the right perspective, I think we're all fantasizing. But that's my opinion as well, and I don't trade opinions. I like to trade price, and I want to thank Pantelis here because he found that report on, I don't know if you can see that, but this is basically a report I wrote. It was published August the 1st, 2014, and in that report at the end I have a fundamental analysis. I'm not keen on fundamental analysis, but I was asked to do it, and I gladly did an analysis. But then one thing I did was to project the price of US dollar here, and as you can see here, if you look at this chart, we were basically here at the beginning of this move higher, and in this chart I projected the 108 area as well as the high 115.80, and these are no more than projection based on the participation of weeklies here as well as dailies, and eventually price got into those levels. So this is to mean for me that I tend to trust more how professional traders and algorithms are placed in the market rather than and looking at and confirming that with observation on price rather than rely on projection. Okay. Of course, of course, there is some there is a huge level of manipulation when it comes to opinions in the market. So let's continue here and let's look at the opportunities. The euro Canadian dollar did not hold a lot on that level and actually broke the 48.33. So whoever is short, and I remember some of you were short last week, my suggestion here is just now to keep this price sliding into 142.96. Okay, hi Karim. We're going to review the euro Japanese yen as well. But as I remember that some people have taken a position short in this market, my suggestion is to keep it now for 142, 143 level here. Okay. Now, of course, this market is very extended and it might actually bounce. Hi, Karim. So we will review those two markets. No worries about that. Thanks, Pantelis, for finding that link. I really appreciate that. So now this market is extended here. So we're going to wait for, of course, this market can keep sliding. But if as this market eventually is going to go now into 143, and this is still, a very good move here. However, what I see here, it's a potential bounce, and this bounce could actually offer a very, very good opportunity here at 149.10. That's the level where we could look at for a continuation lower here. Okay, so if you see this market profit taking in this market, and a way to enter the next move lower is this 141.10. All right, so Karim there was asking for, and before we get into that, let me review the Australian dollar, Japanese yen here. As we know, this market has been moving again between 80 and 82. Very good opportunity if you can trade, and if you are interested in trading this sideways. Again, I believe we have a bullish outlook in this market, because you will remember from the analysis of last week, we have weekly participation below this price, so the path of least resistance is higher in this market, which means that I'm still waiting if this market, of course, now is going to move into 80 once again. Is completing that cycle, started that cycle, completed the cycle, restarted the cycle, completed the cycle. It is possible that the dangerous test was the second test here of this level, so it's possible for this level now to hold again, once again, and trade higher here. I don't see at this stage still this market continuing lower. I see this 80 level very, very strong there, and the possibility to continue higher. So let's look at the euro versus the Japanese yen, and you will remember that this market has reached targets here. There are a number of targets. The best way is to, as always, put this market in perspective here, and I've been doing some analysis here on a new strategy I'm defining for the SPY, and let me review the euro versus Japanese yen here, and let's see if we can actually look at the weekly charts as well, which is very, very important. And we have been mentioning that this market has still not gotten into this 121, which is a level of potential support, at least temporary support here. And this market keeps sliding into that level now. So if you are short this market, no need to remove this market before that level. Now, we mentioned one extension here that was not respected. So this market is actually on Friday has actually showed that it's trading a different extension, and it's coming from previous lows there. So that's where the participation came. We cannot possibly know all these levels in advance. Some of these levels can be projected in advance, others cannot be, and it depends whether the dailies of the 4 hours are in control of the setup of the market. And it appears to me that at this moment, this 124.88 is going to push this price lower into the 122.10 or 122 area, but potentially even below that because of this push that is coming here. If you short this market, you should take profit at 122. That's my suggestion there. If you got short this market from Friday, that's the target I would look at, Karim. Okay. After that, it's very, very dangerous to keep shorts. Of course, the market can be pushed lower, but that position becomes more dangerous after that. You're very welcome. And FX Ambassador asked for the pound versus the Japanese yen, which has a similar shape here, and let's review that again here. So pound versus Japanese yen, as you know, we were looking at that 156.40, and that was tested last week, and the market also went went below it. So before we can actually consider or confirm a successful test of this level, right? A successful test would mean that there is enough participation that is actually breaking the back of the bears here. Okay. Now these bears here, they have a setup here, potential setup that has a first target, but also a second target below that. So here, this is a very important area where we are going to see whether the weekly will be strong enough to break the back of the shorts. Of the shorts will simply continue selling this price. So at this stage, selling this market is to me extremely risky. I want to see how this market behaves when it comes to the 156.40. That's something I would like to see, because whenever that market got into that area, it has been it has seen some participation, as you can see here. Okay, there's seen some participation. Now the market is coming back into that level, and we don't know whether how the market is going to be. So if you're going to see a second test, successful test on this 156.40, that becomes a buying opportunity for at least some of these retrace here into higher prices. Mind that the Japanese yen is projected to be strong on the US dollar Japanese yen, and this could actually influence also this pair. Although we know very well that the pound, on the other hand, it's in a very, very delicate situation also for geopolitical reasons and the discussion on the Brexit. So at this stage, I would wait in this market. And on the 4-hour time frame, we can study the sequence of the measure moves as that market approaches or reapproaches that level. And there is not really a lot of structure here. There might be shorts that are in control, and shorts are in control in this time frame. So we have to be very, very careful. So if we look at the 4-hour time frame, we would, at this stage, anticipate a continuation lower. However, we need to see what kind of participation we get from that level, from that area that I showed you here, once this market is actually gets again into this 156.40. So this is not a short for me. I'm very conservative, and I want to trade when when my trade is aligned with the path of this resistance. Okay, so if FX Ambassador, I hope that answer your question there. The Australian dollar US dollar, of course, has shown weakness due to the strength in the US dollar last week, and we saw it reacting at this extension short. This is a long-term extension short here, which is also visible on the weekly. However, this market has been not very technical, and I don't trust this market at this stage. So we'll just wait for it to stabilize a bit here before I'm gonna I'm gonna trust it, because this market has been it's also showing some typical behavior of a bottoming market, and we might find ourselves in the wrong direction. Anyway, from a technical point of view, and that's everything I do, this was a valid short level here last Friday, and actually it had great participation. However, because this market has not been technical in its way, in its move here, I decided to not get involved. Okay. So any other questions and any other market you want to review here? We have Karim, Rory, Jax, FX Ambassador, Gary. Sorry I'm late. You are always welcome anyway. Rory, Scott, Lee, Beckton. Good day to you, Mervin, Greg, FX Street, Admin, Peter, Pantelis, Roland, Joe, Kerry. Thanks for joining in. Let me get some notes here. We still have some time here. Still have 10 minutes to review other markets. Give me as I wait for your other questions and review. I'm gonna review gold as well, which has broken down, and let me get some notes here on the market that we reviewed, and so we also reviewed, so we added New Zealand dollar, US dollar, of course. We spoke about that, about the euro, Japanese yen, as well as the pound, yen, and then also the Australian dollar, US dollar. So let's review gold here, and let's see what this market has been doing. Of course, we saw that big move on Friday that actually has influenced all the markets, and actually it has influenced silver more than gold. And as I mentioned as well in the past, we are seeing more strength in gold than what we are seeing in silver at the moment. Gold is still setting up its this flag on top of our resistance, so that move lower has not been drastic as on Friday, which is this red bar here, and actually it also showed some recovery at the end of the day there. So at this stage, and the worst can happen to this market is still to keep correcting on top of this flag here, and even breaking lower here if that's the case, and retesting that 1997, 1998 area here. Okay, so gold is holding very well here, and if you are long from lower levels here, there's no reason to exit this trade, Scott. I know that there are other people carrying gold as well. Now, if you compare gold to silver, as you can see, silver, on the other hand, it had this huge and ugly breakdown that broke price back into this area, and now you should really ask the reason for that, because see, silver has tested a potential area of resistance here. So the difference between silver and gold is that when we put them, side to side here, and we look at let me see if I can show another daily window here where we put gold and when we put them, close one to another, I think we see where the problem is. The fact is that gold has actually broken the back of the bears on the daily, and that has not happened to silver here. So we are not seeing a lot of pressure on gold, which can even in a bad day like the one on Friday can actually correct nicely laterally on top of support. And we know this support well in advance because we know how to identify certain areas where we can anticipate the participation. And on the other hand, we saw here silver, so this is comparison, it's compelling here, and we see who's in control here. Now, bulls could come back at any time, but this market is actually throwing back here, and clearly there is much more influence on the price of silver than we are seeing on the price of gold. So generally, we should say that gold is showing to be, at least at this particular juncture, a better edge to the US dollar, which is, I believe, busted than any other than silver here. So gold is definitely, it looks like to be a better play here. Silver has some catch up work to be done, but we also don't have to forget that silver is actually basing here or trying to, and these two long-term trend lines do not tell a lot. I only trace them there to have them as a reference, but I never trust these trend lines. I only trust the actual levels, and until we beat this 16 area here of resistance, we are not going to see the same level of bulls or confidence of bulls in control here that you're seeing with gold. There was selling in gold, but not as extreme as we saw it in silver. Now, that said, silver is back into an area of potential support, so we will see whether the bulls will come into play this week and try to push this price higher, or the bears will keep control and they will throw back maybe this price into and down into these trend lines, or back into this 1410, 14 area. Okay, so at the moment, gold seems to be a better play. Of course, this market is extended, but has actually responded to the 197 at 1197 area here, and it's still possible for that area to be retested, but we are still in a potential move higher there. All right. Now, before we go, if you don't have any other markets, let me review the SP 500 here, and as you know, I always follow the futures because the futures tell much more than the cash actually, and you should not be surprised that this market actually is reacting to different levels, to two different levels indeed. One is the area shorts, which is starting at 952.50, but most interestingly is that the smaller time frame was capable of pushing this price higher into what? Into a target of an extension. And it's only after the price got into that target that we saw the selling. So this is profit taking here, not necessarily. There is for sure also participation from the players on the daily time frame and the 9052, which are participating to this. But this move higher has not been busted yet, has not been, so to speak, the back of the bulls has not been broken yet, and we have two different levels we're going to look at for to declare a start of a move lower here, and this market has to move a lot before we can say that the participation that is coming or the profit taking that is coming at these levels has actually broken the back of the bull. So the first level is going to be the 1928.50 here. If we get participation at this level, there is the potential for this market to get into 2000s. Okay, and so all the talking about the SP 500 is past and we could go lower. I mean, this market has still been defended on the weekly time frame by bulls, and I mentioned a very, very clear and well-defined level, 1797. If we break that level, and we didn't do it, the market is actually the weekly participants actually have defended that level. Which means to me that there is still a weekly support and participation to push this price higher. Only if we break that level, we might actually enter a bear market, but this did not happen yet. So if the 1919 level is broken on the downside, there's still another level that participants on the daily time frame, algorithms on the daily time frame will try to defend, and that's the 1907.75 there. So don't get bad. This is not the time to get bearish about the SP 500. I know a lot of people do not really understand what's going on in this market, but this market could actually still 40 points, 33 points here, and even more to test over 40 points to test for this area to see whether there's going to be any participation. If there is participation, this market is going to break the weekly charts and get into 2000s for starters. And if that happens without breaking the 1918 level, the 1990 level, we are going to see this market keep moving in extension higher. So we have to be very, very careful to all the naysayers and the negative people. Of course, I've been saying that this market could actually start a bear market this year, but I also have been very, very specific. I said 1797 is the level that has to be broken on the weekly time frame. If that doesn't happen, we do not have a bear market or a short in this market. Okay, so if you have any other questions, bring them tomorrow. We're going to review them. As you know, this is a daily show, and I'm very happy to give the latest updates on this market. By the way, I have to give an update on the US dollar Japanese yen. I opened a short, which I removed at break-even last week. So when I saw that the market did not follow up on that move lower, I just removed it. So I think it was the good decision, because then this market continued higher. And that short was at the 50% level from highs to lows here. Okay, we will discuss about that tomorrow. And just as you can see, the market participated there, went lower, but then couldn't make it. So that was not the level that we're going to see the participation short from this market. Okay, so the bears here are now the sellers are now gone, and this market might be for a full retrace into this level here, but the market might not make it into that level. There is another level that we have to look at here, and that's an extension. And that's very, very close. 113.14 could be the price where this market continues higher. Okay, so I'll start a recap right now. We looked at the euro dollar, and we saw that the euro dollar has broken and actually not broken yet that area of support, but is piercing into that area 109.60, which offered us a free trade. This market has the potential to go lower only if the US dollar Japanese yen continues higher. And as I mentioned, I coupled these markets together because sometimes, well, very often, when one market moves lower, the other market moves higher or lateral, and so vice versa. So As in US dollar Japanese yen, we're waiting for one of those two levels, 116.30 or 118.40. There is a potential for this market to continue lower. If that happens, the euro could actually move low and revisit '07 and '05, could revisit the lows. But I have no doubts that US dollar Japanese yen is preparing for a larger short. We just don't know where that short is coming from. And that short is gonna has the potential to bring US dollar Japanese yen down into the 170. I then very quickly mentioned US dollar Canadian dollar. This market has now negated the weekly longs, so this market has the potential to retrace quite a lot all the way into the lows, from the lows to the highs here. Okay, so that's a big move, and this market might retrace before we get something like that. And that retrace might correspond to the retrace that is going to come into US dollar Japanese yen to bring that market into the next measure move, short and areas of resistance short. We then reviewed the New Zealand dollar, US dollar. This market has broken badly on Friday here. However, we also have taken this market and the behavior of this market to discuss what professionals do when it comes to trading these opportunities. Keep always in mind the 80-20 rule. 80% of your gain will come from 20% of your trades, and if you don't let this kind of opportunity develop, you will never bring in those huge wins that make all the difference in the world in this business. Next, I was asked to review the euro versus the Japanese yen, and we mentioned that this market is actually trading lows here. We also updated the anchor. We are not always capable of identifying the anchor before the fact. Very often we are, but not always. In this case, we were not. And 122 is the level where you should be very, very careful and get your target. Pound versus Japan, if you are short. Pound versus Japanese yen, on the other hand, we mentioned that a first test of that 156.41 has happened. The 4 hour is in control short in this market, but we want to wait and see what happens when this level 56.40 is retested again, because we could have some surprises there. And after that, we briefly mentioned the Australian dollar, Japanese yen that actually responded to this weekly extension short here, 72 on Friday, and has the potential to keep pushing lower. I don't trust particularly this market, and I will wait for it to trade in a more technical way at this stage. But anyway, I'm not concerned because I think there are other opportunities that are developing there. And finally, I was asked to review gold, and I took the opportunity also to review silver. We know that gold is actually forming a lateral move here on top of a area of long, an extension long here. It has not corrected dramatically, as it happened last Friday on silver. That actually brought silver into an area of potential participation long. If that doesn't happen, we can see silver back into the 14. And finally, we mentioned SP500 that is actually tested the first target of an extension measure move, and it's now into an area of potential selling, and that's the reason why we are seeing this move lower. This move lower could continue for another 10 points here into 1928, but then we will start seeing whether the bulls are interested in pushing this price higher, and there are two levels, 1928 and 1907. All right, so this is it for today. I hope you enjoyed this to cover these markets. It's going to be an interesting week as always. I want to thank you for your participation. If you like the show and you think that this is helpful, it is definitely helpful for me, because I take this opportunity also to do part of my analysis as well. I hope it is useful to you as well, and if you like it, just just the Twitter about it, tweet the links, or if you have any questions, you can send the questions on LinkedIn as well. Sorry, on Twitter and LinkedIn as well, if you wish. Twitter for sure, and I'm always happy to answer. My answer may not always be timely, but I will always answer all your questions. So I want to wish you a great trading week as well as non-trading week, and I'm going to see you tomorrow for another session of the FX Trade Tokyo Open trading room with FibStalker, and I hope this was interesting. And if you're interested, um, please go ahead and tweet about the show. This should be a very good week coming up, I think so. And I'll be in contact. And if you have any questions, let me know. You can always reach me at fibstalker@gmail.com. Okay, so if you're interested and you have any questions, just let me know. So this is interesting. As far as the usual JPY repatriation and Mondan might it help push the yen higher a lot in the next 14 to 16 hours. Very well. We are very welcome. I mean, this is very welcome. This is going to bring the US dollar Japanese yen right into those 116.30 or 118.40. So very well. I'm looking for that good day. All right. So thank you for being here, and I'll see you tomorrow. Enjoy the rest of your day, and bye bye now.